All right, great. So we had some four brilliant individuals, like really in the markets, sharing their thoughts about their crypto thesis. So it's time to also look at well, Bobby's thesis, because he has been running the first crypto fund in the country. So he has been in crypto more or less since I've been in crypto, so that's more than 10 years. He has been following the markets for a very long time. So I'm kind of hoping for a contrarian perspective of Bobby. And the topic is, this time is different. And I wasn't sure if it's in brackets or it's just like that. But let's start with a couple of questions that I have here for you. And also, please have a look at, scan the code. I saw that we had some questions from the audience that weren't answered, but were quite voted on. Maybe we can go through those as well after the end. But scan and ask, and I'll try to get as many questions in as possible. But let's start with the agenda. So, first question, fundamentals of crypto today versus 5 years ago. Bobby?
Thanks for the intro, Vlad. Fundamentals mostly comprise of the uses of crypto, what people use it for right now. And in order to assess that, we need to see the different categories of crypto. And by far the biggest and probably the most important is the use case of storing value, or the so-called monetary thesis. It's been growing for the past 5 years. I think the world is quite a different place right now. And the idea of having portable wealth is something that a lot of people consider. For the past 5 years, Bitcoin has not just stored the value of people, it has actually grown it by a lot. 5 years ago was 2020, so Bitcoin's price was about $10,000. Right now it's north of $2 trillion overall. So this has grown a lot, and that includes not just retail investors, it already includes a lot of old institutional money and professional asset managers who were still, I wouldn't say ignorant, but downplaying Bitcoin at the time, 5 years ago. And right now they are proponents, and most of them are looking to allocate some portion of their money into this thesis. Also, the changing global geopolitical order makes people look for an alternative of the current system and the dollar assets. So this has grown a lot. Also, 5 years ago, it was just the start of DeFi. It was the first real use case of Ethereum, and right now it's grown a lot also. I mean, there are $270 billion worth of stablecoins only. So that has grown significantly since then. The other two things, the stablecoins are one of those things, and also the casino overall. So lots of people ignore that, but it's a use case, and a significant use case of crypto. It's been speculation, trading, and overall the casino element. And that has been changing and evolving, and it's by its nature, it has to change in order to stay relevant. Otherwise, it's going to be gamed, and people will be disappointed. And it keeps evolving, it keeps changing with meme coins and NFTs and new types of speculation that are going on right now. But it's still relevant, and likely a lot of the gambling money in the world will keep being in crypto in a way. It just gives them a wonderful platform. Most of the professional poker players that I know personally are in crypto one way or another. So these are the major 4 use cases, I would say.
Yes, I agree. And I think you mentioned Bitcoin, you mentioned Ethereum. There was a question from the audience before that, because it was related to Bitcoin. And at $110,000 or $120,000 per Bitcoin, it's no longer something that is interesting to retail participants that much. And they're looking for something, that they can get an entire unit of. And even if Bitcoin goes to 300,000 or 500,000, that will be a 5x. While at the same period, something can go like maybe Ethereum or something more niche can do a 20x. So generally speaking, like this is alluding to my next question, like what is your investing framework? Are you looking into Bitcoin specifically? You have a long time frame perspective, or are you looking for something that could give you a better return for like in a shorter time frame?
It's always better to earn 10x than 2x, right? And 2x is a little bit boring in crypto, but given the market conditions in the past couple of years, it's been exceptionally difficult to perform better than Bitcoin, despite the fact that we're in a bull market and everybody expects a euphoric altcoin mania like we're used to having in the past cycles, but we haven't really seen that this time. And there has been many bets that this thing or the other thing would 10x or 100x, and some of those things actually did, but they reversed their gains. Most of the, I would say 99.9% of the things reversed their gains in terms of Bitcoin very, very quickly. So back to your question, I think the monetary thesis has the highest return and the lowest risk over the long period of time. That's why it's still probably the best one for most people to play at, because Bitcoin, the first stop of Bitcoin basically is the equivalent of the market cap of gold, which already is at about $25 trillion, which is 10 times higher than Bitcoin right now. And it has a real potential for more than that, because in some ways it's more useful than gold. Whereas in most other theses, the investment thesis of the technological thesis, for example, that Ethereum, Solana, and other L1s play at, in my opinion, has much lower target. If they are successful and most of the world's money run on Ethereum, I would say that's quite an estimation, so it may be quite inaccurate, but I would expect Ethereum to be at around 5 to 10 trillion valuation. And Ethereum is not the only kid in town. There is competition, a lot more competition in the technological thesis versus the monetary thesis. And it's much more difficult to predict what's going to happen over there. The third category is the apps that are being built on those layer 1 platforms, and there's even it's even earlier, and there is even more competition over there. So it's really, really difficult. We need to have a venture capital type of approach if we want to invest in those, where our expectation would be that 1 in 20 or 1 in 30 will actually do a really good return, and the rest will basically would destroy our investment. So still, for most people, it's good to think long term and to keep most of the money in Bitcoin, which is the store of value thesis, and some of the speculation money in other things, but not much. And keep in mind that speculation should be short term, and all the profits should be locked back into Bitcoin.
Okay, great. So then maybe we can do something more practical. Because we're talking about Bitcoin, and I mentioned that Bitcoin is 100,000 and could go to 500,000, but most people will not be able to afford the whole Bitcoin. So if you are a normal user, investor, let's say, and you have $50,000 or 50,000 leva, whatever. How would you invest this 50,000? currently. If the goal is to really, grow this money to be meaningful, because 50,000 leva, let's say, is not that much. And if you invest them in Bitcoin, yes, maybe you get them to, I don't know, 100,000, but that's gonna happen, in 2-3 years. It's not really clear. And you all the time you are seeing other things. If you're on X, you see people doing 100x, 20x. So there is a psychological element of this information bugging you all the time, pushing you into more risky stuff. So how would you invest these $50,000?
I wish you asked me the same question in 21, not now, because we have to see the reality as it is, and the market has matured much more compared to before, and we may want to get 100x or 1000x, but if the market doesn't give it, we will just stay with what we wish for and lose the rest of the money that we wanted to invest. So we need to be practical and grounded and see what the market wants to offer. And unlike 2017, which was the wow moment of crypto, it was back then the world realized that this thing exists. It's a new revolutionary technology. There was a bubble. It was relatively easy to make money. Whatever you bought went up a lot. Then in 21, there was a huge influx of new money because of the pandemic, and this resulted in another bubble, which was more difficult to play because not everything went up by a lot, but some things really did well. And now we have a mature market that is driven mainly by fundamentals and very shortly on speculation, and even these short periods are really difficult first to time, because they're short and they vary in time. And also there is hundreds of thousands of more options to choose from. And a very small percentage of those assets, tokens, actually go up a lot, very few of them. And I wouldn't recommend it doesn't matter how much you invest, I wouldn't really recommend to be very highly speculative right now. The only thing that has a potential to rise are those things that are being used and has some kind of revenue. And those are things like Hyperliquid, things like Pump.Fun, that are actually having a lot of fees, collecting a lot of fees, and burning those fees, not really burning, but buying their tokens. And this seems to be probably the most, generating some kind of fees for the network seems to be the biggest driver outside of Bitcoin during this cycle. And there aren't many tokens that are actually doing that. So, yeah, something that is really hot right now is a competitor of Hyperliquid called Aster, which actually increased a lot its volume in the past few days. And thus the market price went up a lot. However, we don't even know whether that's real trading or not, or it's some insider trading by people who own the token, whatever. But it also solidifies my thesis that only the things, or mostly the things that actually have real fees and revenue, do a lot of returns. Of course, a lot of meme coins did that, but then who knows how to play that? I mean, there is hundreds of thousands of them. I know a few people who've made 1000x or 100x, but they invested just a tiny bit of money in a few of those. So it's not a reliable, if you try to play that game with meme coins, again, you need to time the period. Right now, it's not a great period. You need to know when it is a great period, and then you need to somehow be able to choose the best coins, which is, and you have a huge spectrum of choice. So your money needs to be divided in many places, and whether you win or not, it's mostly matter of luck. And I don't really like to invest based on luck.
Okay, great. So again, talking about investing and about people being impatient, I see your thesis, and yeah, I think it's a valid one. But do you think that long-term investing in crypto has evolved or changed with time? Because if it was, you mentioned like 2020 or even 2017, if you invest in Bitcoin, just hold it for 5 to 10 years, can go a lot, like can go up a lot. But now, again, it can go up, but a smaller multiple. So do you think in investing, it makes sense to also incorporate some level of trading, or at least, what is it, like range trading? Or you prefer to just invest and just don't touch that whatever it was invested in? Or do you think it makes sense to also try to follow some trends? And I guess the question is, do you think an investor starting in crypto today should also be able to trade, or should they just follow, like, focus on what they believe in and what they think makes sense, like on the fundamentals?
Regarding this topic, we should listen to the greatest investors in the world, not me. Look at the billionaires who have been investing for more than 30 years, let's say, as a threshold of somebody whose opinion actually counts. And I don't really know a lot of people from that category that would recommend trading. And I personally don't really know people who are really good at trading. I know people who claim to be good at trading. I know people who don't really know how to do their bookkeeping and their accounting, and maybe they think they're good at trading at some periods, but I don't really know people who are actually sustainably good at trading and can outperform the market. And this is one of those things that there is so much data and from the traditional markets that trading actually is not sustainable. It cannot continue successful trading over a very long period of time. And even if it does, it is maybe one person in a million that can actually do it. And there's no way to know who that person is. So I think nothing beats buying quality assets and holding them patiently. Trading is a way of trying to reduce your volatility, but you're also reducing your expected return. But that's my opinion.
Well, yeah, your opinion is important. You're on the stage of ETHSofia, so it matters. And let's go to macro a little bit, because macro is absolutely affecting crypto and risk assets. Maybe two questions in there. Where are we in the macro cycle? We see that the federal funds rate is going down. People are talking about a lot of liquidity now being available to flow into crypto. So I would like to get your opinion on that. And in relation to that, do you think, maybe specifically to Bitcoin, is it a risk asset really, or should we expect it to start behaving more and more really like gold, and when, for example, the S&P 500 goes down, Bitcoin to go up more frequently? So two questions in there, macro and...
Okay, the second one is shorter. So Bitcoin and crypto are still risk assets, so they're going to go down if there is a market downturn. We saw that earlier this year. It was pretty clear. Actually, in most downturns, even gold goes down. It just goes down maybe much less than the rest of the financial assets. And when to expect a reversal, I think we're a long way from there, unfortunately, or not. I mean, I try not to have a bias there. We need to observe how the market reacts. So crypto and Bitcoin, including that, are still risk assets. So we need to allocate appropriately and be ready for volatility. Then on the first question, the macro situation right now is as unpredictable as usual, with more uncertainty regarding geopolitics. But the fact that it's unpredictable, it's one thing, but then what we see today, we can actually evaluate what we see and how good that is. And if I will list a number of things, in a little bit, but if I take the whole picture, I think we're in a good spot, honestly. I think we're in a good spot as far as I can see in the future, which is not very far. It's maybe a couple months out, because macro is notoriously impossible to predict. I think a couple of months in the future is probably the maximum we can be fairly certain about. Inflation is one of the most important things. It is above target, but somewhat anchored, which makes the Federal Reserve somewhat happy. That's why they were inclined to reduce rates, which is good for most assets. Lower rates means higher asset prices. So even though 3% inflation is the new normal, it's higher than they want it to be, it's still okay. The one thing that the Trump administration are doing really well, and they're deliberately targeting, I think, this, is to have a low oil price for several reasons. And one of them is to keep inflation at bay so that rates doesn't go up. And they're somewhat managing to do that. I don't really understand how, but there is probably a lot of geopolitics behind the scenes. They pushed OPEC to actually produce more oil and thus reduce the price. So as long as we are below $70 or even $80 per barrel, I'm happy with that. I'm not really afraid of inflation, which is actually the biggest potential problem right now, because all the other problems could be solved with printing more money, and inflation wouldn't be. And the biggest risk for markets right now is stagflationary recession, where inflation is high and the economy is going down, which fortunately we're not there yet. We may get there in the next few years, likely. Nobody knows when. And fortunately, the economic forecast for now remains good. It's actually increasing. I'm quite surprised, given the low job numbers in the US, but the GDP estimation for Q3 is actually above 3% and rising, which is perfectly fine. Liquidity is basically, it actually went down in the US this month because of refilling the Treasury General account, but in globally it's going up because of the lower dollar. And we can partially see that with the rising gold. These are the most important factors. Of course, there is the geopolitical uncertainty and the changing world order, which is also very difficult to predict and a slowly evolving game. So this is not going to affect the market in a couple of months, but definitely plays a huge part of our decisions if we take 5 years ahead or we think even more long term. So right now, in the next few months, macro seems fine.
Okay, great. Yes, this is also my perspective. And I think it's the perspective of Crypto Twitter as well. Let's go into the questions, because we actually have just a few more minutes, but we can extend it because we have only one panel upcoming, and it's also focused on crypto trading and trading tech, but a few interesting questions. And I think the biggest question that I've also seen around in the community is the 4-year cycle dead? Are we talking about, like, are we in a period where there are no cycles anymore? And due to the TradFi institutions coming in, we don't expect a cycle end. We can expect some, a downturns, short-lived maybe, and then again prices going up. So what do you think about the 4-year cycle, and maybe as short as possible so that we can get through a couple of questions?
Well, first let's define what is the crypto cycle. It is a period that ends with a very large euphoric period that ends up in a bubble, and it is followed by roughly 1 year bear market that goes down 80, 85, 90% across the board. So far we haven't seen really a euphoric period that goes into a bubble. Are we going to see it? I don't think so, honestly. I put less than 20% chance to see that in the next few months. Even if we see something, it will be short-lived, I think, because there is a lot of capital waiting on the sidelines to sell their tokens. That's VC funds, liquid crypto funds, old investors, whatever. So that will be a lot of selling pressure. And also, are we going to see another decline of 80% or more? It is somewhat likely, even if we don't see the euphoria. If we have a macro bear market, there is a chance that, I mean, depending on the severity of the bear market, we could see another 80% down in most assets. 80% down for Bitcoin is maybe a bit too much, but we could easily see 60 to 70% down from these levels.
Okay, thank you. There is a question regarding funds and the digital asset treasuries that are now forming, and we have Michael Saylor. Do you think these are positive for the space, and can there be a situation when they are forced to sell and this making a bad situation even worse?
Yeah, this is one of the trends that actually are quite new and different this time. I mean, they are net positive, I think, because the market apparently is willing to pay premium for those treasury companies, a premium on what they actually hold. So that means that, of course, there is some speculation, but also there is companies and funds, mainly funds, whose mandate is to buy equity and debt. And they cannot really buy the Bitcoin ETF, but they can buy MicroStrategy because it's a company. We could see that with various different plays, but most recently with the Norwegian sovereign fund, that it's holding a small amount, but still holding MicroStrategy. And MicroStrategy is still trading roughly 50% above the net asset value of what they're holding. So this is what the market is saying. There could be, on the way down, there could be some forced selling. But the leverage, thank God, it's not really high. So if there is forced selling, it will be mostly because of the premium going below the net asset values and people who want to move out of this certain asset. But for now, it seems like the leverage is not too high.
Okay, great. Two more questions, and we can wrap it up. This is actually from the previous panel. Just what do you think is an underlooked vertical in crypto? Because we have perps, we have stables. Is there something that people haven't noticed yet? Obviously, AI is very big in the Web2 space. It's spreading throughout the world. Everybody's basically starting to use it. But in crypto is obviously not that developed yet. Is there something interesting with AI happening, or is there any vertical that people haven't noticed yet that you think is interesting?
I'm not personally a super early adopter of those things, so I'm probably not the right person to ask. But yeah, I think the hottest thing right now is the derivatives market around hyperliquid, and yeah, and stablecoins overall. But yeah, that's it.
A final question: why is Bitcoin seen as a superior store of value compared to Ethereum, even though it has higher inflation and lacks utility? And this also relates to another question, when flippening, or do you think there will be a flippening between the market caps of Bitcoin or Ethereum, and Ethereum?
Well, that's a long topic to discuss, but given how much time we have, Bitcoin is the original meme coin, in the way that gold is a meme coin. Money is a social construct, and we believe it's valuable because there is a network effect of other people believing it's valuable. So it's a vicious circle in a way. So Bitcoin was the first mover in this category. It is the most decentralized and censorship resistant of all, even though it's not super useful. So right now it remains the king, and it remains the main competitor in the store of value category. And there is not, I will use this phrase, but right now there is no second best, really. However, once the L1 wars or competition is gone, and one of the layer ones, if it's Ethereum, for example, if Ethereum wins and it's able to scale and it's able to accommodate the financial assets in the world, then it will likely have some monetary premium as well, because it's going to be so useful, so widespread, everybody will need it, everybody will use it. So there is a good chance that there will be a monetary premium in whatever network wins the game. But I think it's a little bit, maybe one cycle too early to know which one of those will be.
All right, great. I think that's quite enough for now. Thank you for sharing your thoughts. I think those are very valuable. And guys, give it up for Blagovest.